Hello there! Well, this is my second installment on my YouTube channel. I hope you guys are enjoying these videos. I'm sure I don't have many followers at this point, maybe not even one follower at this point, but yet I'm going to continue to pursue this and get better at this, and with time maybe I will have 2 or 3 followers in a year or so, and that would be wonderful. I'd be so happy to have 2 or 3 followers. Anyway, one thing at a time, I suppose. So I'm doing this as an experiment, trying to articulate my views on the markets, and I'm sure I'll get better with time as I develop a style and a speaking style and able to verbalize and communicate when I'm thinking about the stock market, financial markets, and all that, because I'm into this stuff. Anyway, so let me tell you. Today is August 23rd, 2024. So we've heard from the illustrious Federal Reserve today, and what they plan on doing is lowering interest rates. Why do they need to lower interest rates? I mean, I thought the good thing in the economy is a higher interest rate so that we can earn some interest on our money. Like if you go to Trustmark, the local bank here, and you drive by there, they say CDs, I think a year or 2 year CD is paying 5%. That's a beautiful thing. It's a beautiful thing for retired people. It's a beautiful thing for young people to earn 5% on their money with no risk or very little risk. But yet the Federal Reserve and the government do not think this is a good idea. What they think is a good idea is for you to take your money out of the bank where you earn 5% interest and put it into the stock market where you can earn 5% interest in a dividend-paying stock. That's overinflated, and the risk of losing your principal is highly, 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 highly likely. But they want to push people into the stock market to give the illusion that the economy is doing well. So it's a manipulative tool that they've been using ever since 2008, particularly in 2017 when the stock market really started taking off under the Trump administration. I think Trump was installed into office as some sort of sales strategy on the behalf of central banks to boost the stock market, to boost the economy, to get the money into as an injection mechanism. They needed Donald Trump to get in there to push the money into the stock market, get that momentum of it getting into the stock market. And then once he did that, a cascade followed, and money just kept pouring into the stock market. Case in point, the Donald Trump administration of 2016 to 2020, stock market went gangbusters. But now he's been out of office for 4 years, and it's still going gangbusters. So the momentum that Trump put in there as an injective mechanism was successful. They're very smart people, the central banks. They know exactly what they want. They know who to install in the leadership position, and they will do whatever they have to do to keep the system going, because the system is fraudulent. The system has been fraudulent, probably in earnest since 2008. It failed, and they're just trying to come up with every manipulative tactic to keep the system going. So, anyway, last year, inflation got out of hand a little bit. Well, the stated numbers that they tell us are way off. They're not even close to reality. If they tell us inflation's at 6-7%, it's more like 14-15%. Whatever they say, double it and then add a couple. They say inflation's down. I guess they're saying they're getting within the 2% target range. But it's probably more like 7-8%. I mean, it's even more than doubling in their fictitious, stupid numbers. But that's the way they are. Inflation's running 7% at least, maybe even higher, based on food prices, based on rent prices, based on housing prices. It's much, much higher than their stated numbers, the CPI. But they want to lower rates. They want to lower rates. They want to pay you an interest rate that's lower than the rate of inflation. If inflation's 7% and they're going to pay you 2%, you're losing money. You're losing principal on your money. And that's theft. That's government theft. And that's what they're doing. So another reason why they're doing this, with the main gist of the reason why they're doing this, is because there are so many malinvestments that have been installed within the economy in the last, I don't know, 16 years? 16 years? Since 2008? So the malinvestment portion of the economy, because of the low zero interest rate policy for the last 16 years, is immense. It's astronomical. And like I said last week in my video, or 2 weeks ago, whenever I last posted a video, the malinvestment is all around us. All you have to do is look. You'll see all these extra shops going in. You see all these motels going in, all these hotels, all these theme parks, all these Airbnbs, all sorts of investment properties, second homes, third homes, fourth homes, fifth homes, everything you can imagine, huge trucks, giant trucks, big houses, big hotels, everything's big, more restaurants, everything. And that's all predicated on the fact that cheap money's been available for all these businesses to take out loans on to build all these restaurants and all these assets and everything, which is unsustainable in a normal economy. All the restaurants, the shops, the hotels, everything I can think of right now in my mind is unsustainable in a slowing economy. Think about that. It's unsustainable in a slowing economy. So they cannot allow a recession to occur. They're trying all they can do to prevent a recession. So inflation got a little out of hand last year. They got in there and they raised interest rates. But did they really raise interest rates? They did raise interest rates while simultaneously buying the debt, while simultaneously buying up the stock market to boost index prices. And all they had to do in order to do that was use their tools, like JP Morgan Chase, all the Wall Street banks. They just use their tools as mechanisms to go in and buy companies like Nvidia, Google, Apple, whatever they have to do to boost the indexes to give the illusion that the stock market's much higher than what it should be. And all they have to do is buy 5, 6, 7, the Magnificent Seven. All they have to do is buy the Magnificent Seven, and stock market goes up, and then everybody follows. A rising tide floats the rest of the ships, and they got the desired effect. A rising stock market, a good economy, while they can give the illusion of raising rates to thwart inflation. But they didn't really do anything. So now, well, maybe they did a little bit. They did raise rates, which pushed pressure on the housing market and other things. They did put some pressure on it while simultaneously. So they did kind of suck a little bit of inflation out of the economy. Well, now, fast forward to today, Chairman Powell just said he's going to lower interest rates. So, I don't know, it's been a year, maybe 2 years of a slightly raised interest rate. I don't know, 4 or 5%. And they're already going to lower it. So they're done with the interest rate raising cycle. It's over. No longer will you earn any money in your bank account. No longer will you be able to buy a good bond that will pay you a good, reasonable return on your money that at least can keep pace with inflation. That's not going to be available anymore. They're taking that punch bowl away in order to sustain this unsustainable economy, all of these malinvestments, because they're scared that the bubble's going to pop and the malinvestments are going to blow up, because they're fully aware with all their PhDs how many malinvestments are out there, the trillions and trillions of dollars worth of malinvestments. It's all around us. So they're going to lower interest rates as fast as possible because they can see some bad stuff on the horizon that's going to occur, and they're going to pump more money into the economy. They're going to try to inflate this thing before it does pop. And they may be too late. Who knows? It would be nice if they were too late, because we really need a new system. We really need to flush the malinvestments out of the system in order for a more sustainable system. But they don't want that to happen because it's going to be devastating. It's going to be devastating. So, what can I tell you? If they're going to lower rates, this could spook the market. It could have unintended consequences. It could spook the market, like, why are they lowering rates? What's the problem? What was the problem with 4 or 5% interest rates? What was the issue there? But they're lowering it nonetheless, which is probably going to juice the market temporarily. But then people are going to start to question whether or not What are the intentions of them lowering rates? What's on the horizon that is scaring them? So I don't know. My prediction is going to be a lot of giving back and forth between the markets. Probably going to go up. It's probably going to go down. It's going to be very volatile for the remainder of the year. And at some point, either the market will break or it will go higher. But I think it's going to be pretty volatile between now and October, November, and the election, the stupid election where Donald Trump and Kamala Harris. I mean, it's the dumbest thing ever. I've never seen the stupidity in what people believe and say with these two clowns, these two idiots. I mean, really, they're the dumbest people on earth. And they're totally bought and paid for by the central bank. And it's just ridiculous that people give them any lip service or even a thought within their head. They're just the dumbest people ever. And they're promoting the malinvestments. They're all in on it with the Federal Reserve. They're promoting the malinvestments. They're promoting zero interest rates. They're promoting Bitcoin. They're promoting crypto. They're promoting all the policies of the central banking community. And they don't have any loyalty to America and what it stands for. They don't have any loyalty to a sustainable economy without all the malinvestments, a reasonable rate of return on your money in the bank. They don't even believe in that. All they believe is maintaining these malinvestments within the economy. And the only way they can maintain the malinvestments within the economy is to pump more liquidity, lower interest rates to zero, and forget the raising of the interest rate policy that the Federal Reserve kind of fictitiously did for the last year or two. It's just back to where they know best. Print money, lower interest rates, and inject trillions into the system to create more malinvestments to support the other malinvestments. But it's all unsustainable. There's no way this is going to go on. There's no way in hell this is going to go on. But we're here, and we're here to talk about it. And I'm going to talk about it next week. I don't know. I'll find some topics to get into. Perhaps we'll talk about gold investing, oil, commodities. They're good places to be. We can make fun of Donald Trump and Kamala Harris, the puppets of the central banking community. We can make fun of them. We could talk about whatever we talk about, whatever comes in my mind. I'm sure my 1 or 2 listeners will really appreciate these videos when I release them every week or two. With that said, food for thought, malinvestments beyond belief, inflation still raging, even though they say it's not raging, it's still raging. And then the 5% rate of return that you can earn in the savings account is now going to be taken away. And more inflation's coming. Higher inflation's coming because they need to sustain the unsustainable debt load. They have to. So we have more inflation, low rate of return, interest rates in a bank account or a safe investment, mutual fund, or not a mutual fund, but a money market fund. And more risk taken, more going into the stock market, more speculation. It's just the whole thing is a continuation of the Ponzi scheme. But enjoy the ride. It's going to be wonderful. Look to commodities, look to oil and gas, look to real assets to hold on to your money, because this money called the U.S. dollar, the euro, the renminbi, the Canadian dollar, the pound, the sterling, whatever you want to call them, all these little fictitious currencies, they're all going to take a hit. That's nowhere to be. And it's sad. It's sad. But whatever. We're going to make it through this. Buy commodities, buy gold, buy hard assets, no matter what they cost. And perhaps there will be a deflationary event on the horizon. We don't know yet. They're trying all they can do to prevent the deflationary event by manipulating the markets, by pumping liquidity into the system, by doing everything they could do, by hijacking the 2 people running for presidents to promote low interest rates, zero interest rates, to pump liquidity into the system, by doing all of this stuff. They're doing all they can do. And that may not be enough. So there could be an event where everything sort of collapses on itself. It could happen. I don't know. I don't know the future. So I'm prepared. Financially, in my portfolio, I'm preparing for the deflationary event that brings down the whole house of cards and exposes all the malinvestments. And I'm also preparing for the hyperinflationary moment where they just don't allow the deflation to come, and they keep juicing the system until it just inflates into oblivion. So you have to play, I believe you have to play it twofold. And one of them is going to work out. Perhaps both of them will work out at times, but one of them is definitely going to work out. The one strategy is to go short the stock market, short the whole goddamn thing. The other strategy is to go long commodities and real assets, no matter how much you have to pay. My hope is we have some sort of crash which raises the value of my shorts and commodities go down in the same breath, and then I take the cash that I make in my shorts and I reposition it into commodities, hard assets. That's what my hope is, but it's very unpredictable. It's like a house of cards. It's like a nuclear reactor about to explode, and it's just like we could talk about it, we could theorize what's going to happen, and we can have a general idea about what is going to happen, but we really don't know what's going to happen. But the thing is to get prepared. Prepare to go long and prepare to go short. And one of these things is going to work out. Perhaps both of them will work out, and time will be in your favor. And we can make a lot of money in the coming days, in the coming years with this crazed economy. Have a blessed night. Hope you guys are doing well. All two viewers. We'll talk to you soon.